Hey everyone, welcome back to the channel. It's great to have you here with us today. We've got some exciting updates to dive into, especially if you're keeping an eye on the crypto markets. Lately there's been a surge in Bitcoin whale activity, and trust me, it's making big waves across the crypto market. These whales are not just making ripples, they're creating tsunamis that could potentially reshape the landscape of cryptocurrency trading. If you're a trader, you need to know what's going down and how it could impact your next move. Let's get right into it. Understanding these movements can give you a significant edge in your trading strategy. So, Michael Saylor is back in the headlines. This guy is no stranger to making bold moves in the crypto space. His company, Strategy, yep, that's the new MicroStrategy, just scooped up over 10,000 more Bitcoin. This isn't just a casual purchase, it's a strategic move that signals strong confidence in Bitcoin's future. That's more than $1 billion in BTC, bought at an average of around $104,000 per coin. This kind of investment is a massive vote of confidence in Bitcoin's long-term value. With this latest haul, Strategy now holds over 592,000 Bitcoin. That's an enormous amount, and it's a clear indication of their bullish outlook. That's a massive slice of the entire circulating supply. When one entity holds such a significant portion, it can have a profound impact on market dynamics. Now here's where things get really interesting. The implications of such large-scale accumulation are far-reaching. Bitcoin has a hard cap of 21 million, right? This cap is fundamental to Bitcoin's value proposition. Once you factor in lost coins, untouched Satoshi wallets, and what's still left to mine, there's barely any liquid BTC left. This scarcity is a key driver of Bitcoin's value. So when giant institutions start buying up huge amounts, it cranks up the supply pressure. This can lead to significant price movements. If demand keeps rising, we could see a serious supply shock, and that's the kind of thing that can launch prices higher, fast. This is where the potential for explosive growth lies. But don't get too comfortable just yet. The market is always full of surprises. Even with all this bullish buying, the technicals are sending some warning signs. It's crucial to stay vigilant and not get swept up in the hype. The MACD on the weekly chart is hinting at a bearish crossover, and RSI is showing divergence. So, even though price hit higher highs, momentum's not keeping up. That's usually a red flag for traders. These indicators are essential tools for understanding market sentiment. At the moment, Bitcoin is moving sideways, consolidating in a tight range. This period of consolidation can be frustrating but is often a precursor to significant moves. Key support is sitting around $101K to $102K, and there's heavy resistance building at $110K to $112K. These levels are critical to watch. If BTC breaks below support, we might tumble to $96K, $97K. This could present a buying opportunity for those looking to enter at lower prices, but if we crack above $110K, new highs could be right around the corner. This would be a strong bullish signal. And it's not just Bitcoin. The entire crypto market is showing interesting patterns. Ethereum's chopping between $2.4 thousand and $2.8 thousand, waiting for a breakout. This range-bound movement is something to keep an eye on. Solana's holding strong near $143, $146. Watch for a double bottom pattern if it pushes above $167. This could signal a potential rally. XRP is still stuck between $2.10 and $2.35, and Chainlink's caught in a $12.80 to $15.50 squeeze. These tight ranges suggest a breakout could be imminent, so what's the play here? Accumulation and patience. Building a position during these times can pay off in the long run. Sideways markets drive short-term traders nuts, but that's when smart money quietly positions for the next big move. Patience is key. With whales like Saylor stacking up, long-term upside potential is still on the table. Their actions speak volumes about where they believe the market is headed. Keep your eyes on those key BTC support zones around $101K. These levels will be crucial in determining the next move. If the price holds and we get a bullish confirmation on RSI, that could be your entry. This could be the signal you've been waiting for, but if support breaks, don't panic. Be ready for more consolidation or even a deeper pullback. Staying calm and prepared is essential. If you want to trade these setups and grab some bonuses, no KYC needed, check the links below. These offers can give you an edge in your trading, and remember, don't trade blindly. Wait for confirmation and react to the moves. Always have a plan and stick to it. Thanks for tuning in. Smash that like if you found this helpful, and hit subscribe for more real-time updates. Your support helps us bring you the latest insights. Drop a comment. Are you buying this dip or sitting on the sidelines waiting for new lows? We'd love to hear your thoughts and strategies. Catch you in the next one. Stay tuned and happy trading. Let's shift gears and look at one of the most powerful forces shaping the crypto landscape right now: institutional adoption. This is a trend that's been quietly building for years, but in the past year, it's accelerated at a pace few could have predicted. The involvement of major financial players is fundamentally changing the way Bitcoin is viewed, traded, and integrated into the broader financial system. Over the past year, we've seen a wave of traditional finance giants, from BlackRock to Fidelity, entering the Bitcoin space through spot ETFs, custody solutions, and even direct investment. These aren't just small experiments. They represent a significant commitment of resources and expertise from some of the world's most influential financial institutions. This isn't just hype, it's a fundamental shift in how Bitcoin is perceived, moving from a speculative asset to a legitimate part of global portfolios. Here's why this matters. When respected institutions put their weight behind Bitcoin, it signals to the world that this asset class is here to stay. When these institutions allocate even a small percentage of their massive funds to Bitcoin, it creates sustained buying pressure and increases mainstream acceptance. This isn't just about price action, it's about trust, credibility, and the normalization of Bitcoin as a core investment. We're already seeing record inflows into spot ETFs with billions of dollars pouring in within weeks of launch. These inflows are not just numbers on a screen, they represent a new class of investors who are in it for the long haul, not just for quick gains. This trend is helping to reduce volatility and boost liquidity, making Bitcoin more attractive to conservative investors and pension funds. As more pension funds and endowments consider Bitcoin, the asset's reputation as a risky bet is slowly being replaced by a narrative of stability and long-term growth. But there's more. As regulatory frameworks evolve, we're likely to see even broader participation. Clearer rules mean less uncertainty, which is exactly what large institutions need before making big moves. Major banks are building infrastructure to support crypto trading and custody, investing in technology and compliance to ensure they're ready for the next wave of demand. Meanwhile, governments across the globe are clarifying rules for digital assets, creating a more predictable environment for both investors and companies. This global regulatory momentum is setting the stage for a much larger influx of capital. This legitimization could open the floodgates for trillions of dollars in potential capital. We're talking about a scale of investment that could dwarf anything we've seen in previous cycles. So what's the takeaway? While whales and retail traders still move the market in the short term, it's the slow, steady march of institutional adoption that could set the stage for Bitcoin's next explosive growth phase. The real story is about the gradual, relentless accumulation by institutions with deep pockets and long-term horizons. Keep an eye on ETF inflows, regulatory headlines, and which major players are joining the space. These are the signals that can help you anticipate the next big moves in the market. By tracking these developments, you'll be better positioned to understand where Bitcoin is headed next, and how you can take advantage of the opportunities that institutional adoption is creating.